Ever wondered why your car insurance bill keeps going up? Even when you're a perfect driver, no accidents, no claims, no tickets. Yet every year, that number climbs higher. It feels aggressive, unfair, and honestly, a little mysterious. Well, the truth behind these soaring prices is way more complex than insurance companies want you to believe. Today, we're pulling back the curtain to reveal the real reasons your wallet is taking a hit. First, let's talk about your car itself. Modern vehicles are packed with amazing technology, smart cameras, radar systems, and complex sensors. While these features make driving safer, they also make repairs incredibly expensive. A simple fender bender that used to cost a few $100s to fix can now run into the thousands because of all the delicate tech that needs to be recalibrated or replaced. When insurance companies pay out more for these high-tech repairs, they pass that cost directly onto you through higher premiums. Then there's the weather. We're seeing more severe weather events like massive floods, hailstorms, and hurricanes across the country. These disasters cause billions of dollars in vehicle damage every single year. Insurers have to pay out massive claims to cover all those losses. And how do they make that money back? By raising rates for everyone, even for drivers who live hundreds of miles away from the disaster zone. So, a storm in another state can literally make your premium go up. And it doesn't stop there. Medical costs have also skyrocketed. When accidents do happen, the hospital bills for injuries are at an all-time high. Every time healthcare costs go up, your auto insurance policy feels the ripple effect, because it has to cover those rising medical expenses. But here's the part they really don't talk about. Many insurance companies are actually struggling to keep up. The amount of money they're repaying out in claims is growing faster than the money they're recollecting in premiums. So, to protect their bottom line, they raise rates across the board. They'll blame market conditions. But behind the scenes, they're also spending a fortune on advertising, new technology, and administrative overhead. And guess who foots that bill? You do. Here's the most shocking part. Your location is being used against you. Insurers use sophisticated data to predict risk, and they'll charge you more based on things you have absolutely no control over. This includes local crime rates, regional weather patterns, and even the accident statistics of other drivers in your zip code. You could be the safest driver on the planet, but if you live in a higher-risk area, you'll pay more. So, the next time you get that renewal notice and see another price hike, don't just assume it's random. It's a calculated result of expensive technology, wild weather, rising medical bills, and corporate financial strategies all converging at once. But knowing why this is happening is your first step to taking back control. It empowers you to compare rates more intelligently, ask the right questions, and find a policy that truly works for you, not just for the insurance company. Thanks for watching, and be sure to subscribe for more insights that help you